Well, with me is Ian Greenstreet, Chairman of Infinity Capital Partners and Board Director at Diamond Bank. Welcome to the programme. First of all, let's talk about South Africa. What of the future? What of the legacy of Mandela?
Well, I think Mandela has set an example for all of us in terms of, behaviour, peace, reconciliation. Obviously, the issue is taking that legacy going forward. We have an election coming up in April 2014. And as you know, there's a tripartite alliance between the ANC, between the Congress of South African Trade Unions and the South African Communist Party. Clearly, coming into an election, there's going to be a lot of political manoeuvring, going to be a rumpus. But I see that to be relatively short term. I see the rand to depreciate towards the election, but will recover 3 months thereafter.
Mm-hmm. And what about South Africa and the rest of the African continent? Because it is still just about the biggest economy, isn't it?
Absolutely. My view is that you will have South African companies that have a lot of cash on their balance sheets will look to invest in some of these other sub-Saharan African countries in order to generate superior returns. So I see that to be a key development, and I see that also reflective of the fact that South African cost of labour is higher than in many of these other countries.
What of the ANC, do you think? How, are they don't seem like a natural free market party, but will they adopt that, do you think?
I have no doubt that policy and the existing policy will continue.
And you're confident, because I mean that's what a lot of people will worry about in South Africa, aren't they?
I am very confident. I think the challenge is really generating superior growth. Currently, it's about 1.8% per year, and you really need to generate increased wealth to solve some of the issues of employment and some of the social issues that there are in South Africa.
I mean, that you've hit it, haven't you? I mean, that nothing really has changed since the election as far as that's concerned. And I mean, people could criticise what's happened since 1994 along those lines.
Well, one had a period of very strong growth up until 2008. And so in that period of strong growth, one is able to, if you like, bring up a lot of people, get them into the economy, generate employment. But it's more difficult when South Africa is growing at developed market rates to essentially solve some of its intrinsic problems.
Could we address some of the other sub-Saharan main economies now? And first of all, we have to talk about Nigeria, don't we?
I mean, Nigeria is a powerhouse. And Nigeria is growing at 6 to 7% per year. If it had power, it would be growing at more or less double that, more than China. Its population in 2050 will exceed the United States. It will be the third most populous country on this planet after India and China. And clearly, Nigeria is an oil-based economy with 70% of exports being oil, petroleum. And obviously, the price of oil and production of oil are key factors that will affect the Nigerian economy.
What about the other big economies?
For me, I think there's Kenya, and there's a whole host of other economies which shouldn't be ignored. Phenomenal potential in Ethiopia, not often talked about, Angola. Essentially, it's the oil and commodity and mineral type economies, because it's those economies and that area that will drive infrastructure growth.
What about investment opportunities there?
Absolutely phenomenal, really. I mean, you really got your choice. The areas that we like are banking. For example, in Nigeria, the deposits to GDP is 30%. In Kenya, it's 60%. In South Africa, it's 70%. And here's a population currently around 170 million with huge projected growth. So the opportunities are abound. In power, for example, where you've only got 3.6 gigawatts of installed capacity for a population of 170 million people, massive opportunities. So I think that there's opportunities in whichever sector one has specialism in.
You know the ironic thing, I'm told it's more difficult to, for example, export from South Africa to Botswana, South Africa to Europe. Do you see some of those governments actually getting together to try to open a better trade zone in that sort of area? Because that's what's needed, isn't it?
That there is no doubt about. That has to happen. So, but certainly within the SADC countries, there's a clear drive to improve infrastructure. Quite frankly, you need to move your commodities and move the things that you are buying and selling across borders. And that requires infrastructure. Let's not forget that gold was first discovered in South Africa in 1886 in a place called Witwatersrand. And it took 30 to 40 years to develop the infrastructure to support that. Africa, sub-Saharan Africa, is probably about 11 years down that 30 to 40 year path. And I can tell you that it's going to move much faster. The road is going to be much shorter than it was in 1886.
Ian, thank you very much indeed.
Thank you.